Hello and good morning, folks. Welcome back to Almus Market Mornings, where we bring to you the latest in the financial markets. We start the week on the backdrop of a recent update from the US, where the Senate starts debating the big, beautiful bill. Saturday saw a procedural Senate vote of 51 to 49, which cleared the way for 20 hours of debate before finalizing a passage of vote. Friday also saw the release of PCE index, which was broadly in line with expectations, while domestically India's current account recorded a surplus in Q4 as net services receipts saw an increase. JK, what do you think markets would be focusing on this week?
Good morning, Swaraj. Yes, before we get on to what is ahead this week, we also just look at what came about on Friday. We had the all important PC core inflation number from the US, and that actually came a little higher than expected, particularly on the core side. Once again, the culprit was the services side inflation. Goods inflation was actually lower. So, in any case, it's still eluding that. Fed's target of 2%, although the projection has been at 3.1% for 2025. So that way it is below that because core year-on-year inflation is currently at 2.7%. Now, more than the inflation number, what we saw was one more evidence of consumption falling. So we had the personal spending, which came at minus 0.1% versus 0.1% expected, and the personal income also dropped quite a bit at minus 0.4% versus 0.3% that was expected, and last month it was at 0.7%. So this this is a further confirmation of consumption slowing down. A couple of days back we also spoke about the GDP number where personal consumption had dropped to minus 0.4% again, once again in Q1. So this is actually this is going to reflect in the Q2 GDP, which is also likely to be weaker. Now, consumer spending uh, apart, we also had the Michigan final report, which showed that the inflation expectation has actually fallen from 6.6 last month to 5% this month. Long run inflation also came down from 4.2 to 4%, but they are all well above, as you can see, they are well above the uh, targeted inflation of Fed. So not much. So it's only, you can only say that the consumers are now perceiving less price pressures. So that's the only thing that you can get from this data, but otherwise it's not had much of a impact. Then of course we also had the Japanese core inflation number on Friday that came lower than expected, much lower than expected, and that now justifies Japanese central bank holding off another rate hike. Now that gave some support to the risk asset. Japanese stock market has actually done extremely well in the last few days. On the basis that Japanese central bank is unlikely to raise rates sooner. It could be pushed back further. Also, that was the economic data, but of course we also had some numbers from India, which we'll deal with again. Uh, Apart from the economic numbers, we also had some important statements. Like, there was a bombshell thrown by um, Trump when he said that, all discussions with Canada are off for a trade negotiation because the Canadian government has been imposing good amount of tariff on the technology services that is exported from US, and he also said side by side that they could even extend the negotiations with other countries up further beyond July 9th. There was also a statement from Treasury Secretary Besant, who said that we could have trade wrapped up by Labor Day, that's September 1. So it does look like, they could, while they could have some deals in the coming days, eventually the whole issue can be postponed till September 1, because it's not a simple thing. And I mean, there quite have complications with several countries. So these statements actually overshadowed the agreement that was reached between Washington and Beijing last month to expedite the rare earth shipments and all that. So that was regarding the a tariff update, and of course markets also had seen the yields drop to good support line at 4.25%. That's particularly on the 10-year market now. Is now inching towards expecting three rate cuts this year, as against two that was being priced in. So expectations are that there could be a hike of 0.25% each in September, October, and December. Now, the currency on the dollar, euro made a new marginal high for the cycle, but it is lacking some momentum. So I somehow feel that euro could be some sort of profit taking could be around the corner as far as euro is concerned. So we might have some trigger going forward in this week. And Japanese yen has already started to weaken after the inflation number. And similarly, some of the commodity currencies are not able to hold on to their gains recently. So the overall dollar index, having been sold off for 7 weeks successively, is likely to see some consolidation in terms of price or in terms of time as well. Normally in technicals, 7 weeks of consistent rise leads to a period of correction as well. Now, come to India. Yes, you said there has been some important macro numbers as far as India is concerned. We recorded a current account surplus for Q4 of FY25 at 13.5 billion, which is 1.3% of GDP. And this has been the result of lower imports for that quarter, and also services side recording a good increase. Also, the outgoing outflows on account of the income repatriation by foreign companies, that also was lower. So all these together helped current account surplus. However, the BOP, which is made up of even capital and revenue flows, both sides, was actually a bit lower. This is understandable because for the full year we had both FDI and FPI flows coming much lower, and also slightly the debt to reserves was at 91%. So for external debt is higher, and reserves are just 91%. This is one area that requires some attention. Although in a normal situation that doesn't mean much, but at a time of currency crisis, these become focal point. But overall macro numbers in India, they're good. And so on the Fridays, we saw rupee gain another 25 odd paisa, traded a low of 85.43 and close to near 85.50. Quite a bit of recovery from close to 86.90 that was seen just a week back. After US had attacked the Iranian nuclear facility, oil price has been the major trigger. Along with that, IPO flows. Now, from here, where? So I see limited downside from here right now because of important events coming up this week, and perhaps we could see these IPO because IPO has been closed. The largest IPO of HDB Financial Services has been closed on Friday, and the allotment would be happening in the early part of the week. That's important because as and when the allotment happens, the excess money put in by the global investors, foreign investors rather, would be refunded, and this would result to some outflow as well. So beyond that, even the dollar index, if it does correct ahead of the key non-farm payroll data in the week, that could also result in some sort of a bounce. So I think while rupee may not see a major weakness, we can well see some sort of bounce from around these levels. Also, we know that in the next 1 month, RBI has a forward maturity of nearly 7 billion, which they have to meet, and they may well accumulate the dollars around these levels for meeting those liabilities as well. So overall, dollar in a consolidation is what I expect, both against INR and the major currencies. And of course, just have to refer to some of the important events that is coming up in this week. Of course, we are about 10 days away from the tariff. Reciprocal tariff deadline. Beyond that, we also have the equivalent of Jackson Hole Summit of Central Bankers at Sintra in Europe, where all the central bankers are invited by the ECB. And one of the topics that is up for discussion is the monetary system centered on the US currency beginning to unravel. So this is one of the topics. So very important discussion that's likely may not be a market moving factor, but it's a medium term something that we would like to watch. And another news that will be I'll be watching out is OPEC is set to weigh another supersized oil output increase, and again oil price is already under pressure. It was under pressure before the Gulf War, and it has dropped significantly after the ceasefire. And again, if this happens, where the oil goes, such something that we need to see. Could well be in favor of India, but then oil. Significant drop in oil could also lead to some sort of economic trouble for some of the economies. Apart from the economic numbers, non-farm payroll numbers on Friday, not Friday, because 4th July being a holiday for US on account of Independence Day. Thursday, we'll see important non-farm payroll data being published. Before that, we have the ISM manufacturing and services, both of which were market movers in the last month. And of course, we'll also have the German inflation number. From India side, we'll have the industrial production data as well. So all in all, active week ahead. More talk on tariff is what I expect, and of course, economic numbers will be on the watch. Thank you.
Thank you, JK. And I think one key theme which I'm getting from you is that a profit taking is likely, especially on the dollar index, which has been now sold off for 7 consecutive weeks, and it may see some consolidation or correction, which may bring, of course, the euro down. And also domestically, when it comes to India, the rupee has already appreciated quite a bit, and now we are seeing at a limited downside for USD INR. IPOs are done. Now, whenever allotment happens, the excess money will be refunded back, and that may also result in some dollar buying. So for India, also the theme would be the strength of the recovery in dollar index, along with some outflows that may result. So a small sort of a bounce is possible. Nothing major, as JK mentioned. And of course, in the week ahead, we have the non-farm payrolls on Thursday, ISM manufacturing and services data from the US, along with the industrial production data from India. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.